Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the pops back up towards that 67, 68 area were sold into. And given the breakdown in the Russell yesterday afternoon, our bias in the overnight session was bearish. The bounces were a little bit more than expected, but they were eventually sold into, and ES ended up balancing at some lower prices. At this point, heading into the open, we're going to be using 62 to 64 half as the bull bear zone. And really, if this market is going to break lower, we want to see it holding below 59 to 60 to confirm that breakdown scenario. At this point, if we start stabilizing above 59 half 60 short term, that would be a red flag for buyers, or sorry, for short sellers. But 62 to 64 half is really the key area where sellers need to hold if this market is really going to head much lower. Now, looking at the Russell and the fact that we broke down below a pretty established range indicates that there could still be some downside potential in the S&P, and if we continue to hold at these lower prices and balance below 59 half and below 62 to 64 half, then we could get a liquidation type move down to 48 half to 50 half, and potentially 44, 46, open gap at 42 half. All those zones would then become downside objectives, with the high odds target being 48 half to 50 half, and then the 44 to 46 being a range extension area, and then 42 half, depending on whether there's enough volume to really extend the range all the way down there. And first test of those zones can still attract responsive buyers, but we do have to be cautious on long setups if the market does start liquidating below 59 half and below some of these recent lows, because we may not really get a decent bounce until we really get extended to the downside, especially if the markets are in a downside liquidation type scenario. Now, because everything is set up for a downside move, that's the main scenario we're going to focus on. But at the same time, if that doesn't happen, then in real time, if we're watching the market and we see that it should be breaking down but it's not, then a lot of times that can set up a move the other way, because the market gets caught on the wrong side, and you end up getting a stronger bounce than expected. So on the upside, 62 to 64 half, we're going to use as the bull bear zone. But if that area doesn't get respected and it doesn't hold, then we could be looking at a pop back up towards 69 quarter to 71 quarter, and potentially up towards 74 half, and even 76, 75 to 78, 75 wouldn't really be out of the question at that point, because the downside scenario that should be taking place failed to do so. And at that point, we would expect buyers to be stepping in pretty aggressively in the Russell as well. So for TF, keep an eye on the 1098 to 1100 zone. As long as TF holds below 1098, it would tell us that it's still holding below that recent range, and we can still get continuation on the downside. But if TF starts popping up and really holding above 1098, then we have to be careful on the short side scenario, because if buyers step in to the Russell, then S&P and Nasdaq have been pretty resilient anyway, and we could see a bigger move to the upside in those markets. But for now, as long as the weakness in TF persists, we are going to be focusing more on the short side below 62 to 64 half, and be cautious on any long setups unless we see in real time that there just isn't any downside momentum, which again is not the expected scenario, but you have to be prepared for both sides, right? If the sellers can't really press here, then we could be looking at a move back up. But the expected scenario is that because TF broke down below a pretty established balance, that there is going to be some follow through, and any pops back up to 62 to 64 half, and 65 quarter, 65 half, those areas can still be used as resistance, and sellers could be active there. So the main focus today is going to be watching the bull bear zone, and as long as ES holds below it, We can still get some continuation. If we start moving past 64.5, then you have to be cautious, because at that point, you could be looking at more of a balanced type session. You could simply balance at some of those higher prices. But for that to happen, we would want to see the Russell pick up some buying as well. So those are the main thoughts heading into the open. Let's see if the sellers can maintain short-term control below the bull bear zone, and we'll take it from there.